Hey everyone, Nio and Xpeng are two of the largest Chinese EV companies with units sold over 100,000 for the year for each of them. So which one is the better buy? That's the question I'll answer in this video in looking at these two, looking at their prospects going back several quarters and looking at their prospects going forward and trying to determine which one is a better value at current prices. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so in its latest quarter, Nio told investors that it delivered 160,000 units in 2023. That was up by 31% from 2022. Nio launched several new models in 2023. Also, it took out the free battery swapping service, about middle of the year to make its vehicles even more profitable. Now, you can see the quarterly breakdown of sales in 2023, with the biggest unit sales coming in the third and fourth quarter. The newer models were launched around the summer of 2023. So, nice increases from Nio. Additionally, the vehicle profit margin came in at 11.9% in the fourth quarter of 2023, compared to 6.8% in the fourth quarter of 2022. Management has noted that they feel confident they can get this number up to the higher double digits, like 15 to 18% perhaps, over the next few quarters. Also, one of the big things Nio recently did was they purchased their manufacturing outsourcer. They used to outsource manufacturing. They've now purchased that company and they're bringing it in-house. This means its expenses are going to rise, but if sales also rise, the potential for higher profit margins is now better with Nio. Because when you own the manufacturing facility, you have better upside, but you also have more downside. So it becomes a riskier investment, but it also offers higher upside. So as if the company was not already risky, you're now adding to that with Nio here. But the upside is there, and now that upside just increased with that purchase. Moving on to Xpeng. Xpeng delivered 141,000 vehicles in 2023. That was a 17% increase year over year. Total deliveries were 60,000 for the fourth quarter of 2023, representing a 170% increase from the same quarter the prior year. So Xpeng, while it grew less quickly for the whole year compared to Nio in its most recent quarter, its growth was absolutely phenomenal at 170%. Now, vehicle margin for Xpeng came in at 4.1% for the fourth quarter of 2023. So its vehicle margin is behind Nio's, fraction of Nio's. Nio's was up in the double digits. So Xpeng, 1/3 of the valuation or the vehicle margin compared to Nio, so a little bit behind there, but its growth in deliveries significantly outpaced Nio in the most recent quarter. Longer term, trailing 12-month revenue over the last several years, Nio has demonstrated better growth here with 7.822 billion in trailing 12-month revenue compared to Xpeng with 4.3 billion in trailing 12-month revenue, and Xpeng still hasn't reached its peak that it hit in 2022 in terms of trailing 12-month revenue. Nio, meanwhile, has eclipsed that peak and is on its way higher. However, for net income, Nio is still moving in the wrong direction, while Xpeng did make an upward swing. You can see Nio net income negative 777 million. Nio has been losing money on the bottom line for several years, and it seems like it's just moving in the wrong direction. It's going backwards here. As it generates more sales, it loses more money. Similar story can be said for Xpeng, although the most recent quarter, it actually improved, shrinking the loss on the bottom line to just negative 187 million. And remember, its net sales jumped by nearly 200% in the latest quarter. So if that level of growth continues for Xpeng, it could potentially hit profitability soon if it moves in this direction. However, if it drops back down and continues that longer-term downtrend, then losses could continue. Overall, the Chinese EV market is extremely competitive. Price wars are always happening. And in fact, for 2023, there was significant price cutting going on throughout all of the EV companies there. And then there's significant increase in supply. Nearly all of the companies are launching new models and increasing supply. And so that's making it harder as well. Competition is fierce, and you can see the impacts it has. I often talk about how investors should avoid industries with strong competition or fierce competition, and EVs are one of them. And the Chinese EV industry especially is more competitive than anywhere else, given the growth in that category, given the government incentives in that category, and given the increase in competition and supply in that category, all of which are hurting profitability industry-wide. I also want to look at the balance sheet and compare these two on which one has a better balance sheet, considering that they're each losing significant sums of money on the bottom line, as I showed you. Well, you want to look at how much money they have, because you don't want them to run out of money and then have to go back to investors in a desperate position asking for more funds. And in this regard, XPENG has a better balance sheet. Nio has $7 billion in cash and short-term investments with $5.4 billion in debt. XPENG has $4.46 billion in cash and short-term investments and just $1.5 billion in debt. So roughly 3 times its cash, roughly 3 times its debt it holds in cash. So it can pay off its debt and still have $3 billion, $3.5 billion in $3 billion in cash. Whereas Nio, if it was to pay off all its debt, it would have only $1.6 billion in cash left over. So XPENG in a better position in terms of the balance sheet. And finally, I wanted to look at valuation, and they're trading at really, really close valuations. You can see just how closely they are aligned here. Nio trading at a forward price to sales of 0.607. XPENG trading at a forward price to sales of 0.681. So very close in their valuations. Some of the benefits: Nio has a better vehicle margin. Nio sold more units in 2023. XPENG has the better balance sheet. XPENG had the better growth in the most recent quarter. They're both losing money on the bottom line. XPENG is trading at the more expensive valuation. These two are really close, and if you were to ask me, I wouldn't want to own either of them. But if you forced me and you said you have to buy one of them out of these two, it would be close. But I think I would choose Nio because of the better vehicle margin. The better vehicle margin being the main determinant of this decision, given that everything else was so close. That 3 times better vehicle margin from Nio compared to XPENG would sway me over on the side of Nio. And then on top of that, since they're so close and Nio is trading at the cheaper valuation, that makes it even more favorable compared to XPENG. So Nio would be my choice in the better EV stock to buy today. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.